So before the non-farm payroll, I want Roberto here to take over and let us know exactly how he's going to trade the event tonight. And again, as many of you know, he's absolutely great at explaining how he uses very simple systems to bag pips, and he's been doing it, like I said, all month long in the Forex trading room at theforexroom.com. So thank you very much, Roberto, for spending time here, and I really appreciate it. I'm going to make you the presenter now. Thanks, Roberto.
Hi, everybody, and welcome to the Non-Farm Payroll report trade / analysis. It's going to be a little bit of a challenge because there's so much going on. We've had the fiscal cliff, we have a debt ceiling coming up in 2 months, and Forex is a forward trading market, so anything that may happen in the future will definitely affect the Forex market today. So any extreme numbers, let me just pull up the Forex Factory. Let me just pull this up right now. And it's coming out just in about 10 minutes from now. We're not really interested in the Canadian unemployment or employment change. We're going to be focusing on non-farm payroll, U.S. non-farm payroll, and unemployment rate. Now, we need at least 130K jobs, and I'm not sure we're going to get that because the numbers for December, I don't think the retail numbers did not come out, were not very impressive. So we're going to have to wait at least 5 minutes. If we do get an extreme number, plus or minus, and in the unemployment rate matches the non-farm payroll, in other words, if the unemployment rate is positive and non-farm payroll is positive, then there should be a trade. And also the opposite, if the unemployment rate goes up and non-farm payroll numbers are down, then there should be a rate. But there's only really a trade if we do have extreme numbers. And we're looking at least 180,000 jobs and 7.7 unemployment rate or lower for the market to spike up. Now, let's go to the charts. And we're looking at, I'm not sure if you can see what these pairs are because the text is so small, but we're looking at all the yen crosses and the Euro USD. We have Canadian yen, Swiss yen, Euro yen, Australian yen, and pound yen, and why the yen crosses and not pound dollar. And the only answer I have is that these move a lot more. So you get more pips per trade than if you would trade. The pound dollar does move, but I'd rather trade the yen crosses and the Euro US dollar because it's sort of like a barometer of what the US dollar is doing. So if the numbers are positive, then the Euro USD should, we'll see what happens, but these are the 15-minute charts, and we're just going to wait for a spike and then wait about 5 minutes and see, and we're going to draw a horizontal line top and bottom depending on the announcement. So if we do get an extreme number and let's say it's extremely positive, then what we'll do is wait for the spike, wait for the market to come back down for support and enter a trade. And let me give you an example of that. We're going to take the Canadian yen, which moves quite a bit and sometimes doesn't even like to retrace. We're going to look at a 5-minute chart. Let me just remove all these. This is from trade that we took yesterday. This pair. And we're looking for a spike. So if it spikes up, then what we'll do is draw a horizontal line top and bottom of that initial spike, and then we just have to wait it out and just wait for a direction. Now the numbers, unless, and again, if the numbers are not a surprise, then we really don't have a trade, and we're just going to have to wait till the market settles down to see what direction it takes. So the market is going to, let's see, we have about 7 minutes left. So if, I'll take questions now. If anyone has any questions, please feel free to ask me now before the numbers come out, because about 2 minutes before the news, I like to just settle down and just wait for the announcement and just see what happens and see how the news is digested, and then decide if there's a trade or not. So feel free to ask any questions, anything about non-farm payroll.
David A says you're using the 5-minute charts now, yes?
I'm using a 5 and a 15-minute chart, and it's just, to tell you the truth, I'd rather use a 15-minute chart on non-farm payroll. I use a 5-minute chart for other news events, but because this is such a high-impact news event and there's so much noise initially, I'd rather use the 15. Now that means we're not going to be placing a trade till after that 15-minute candle closes. Okay, but I'll be looking at the 5-minute chart to see what kind of spike we have. So if it's a substantial spike, let's say maybe 50 pips, then that's going to be difficult, because we need for the market to come down to us for us to enter a trade. You do not want to take a trade after the market has spiked up 50 pips, because really that's the amount of pips I'd like to take, just bank and just close shop for the day. So anywhere from 50, maybe if we get lucky, maybe more. But
yep.
News trading is very short-lived. Unless it's a very extreme number, then yes, then you can stay in that trade probably all day.
How long do you find the news lasts normally, or does it depend on the news release?
It just depends on the release.
Yeah.
If it's number one, if it's a very extreme number and it's going with the direction of the trend, if it supports the trend, then probably the rest of the day, which for me would be 4 hours, because around 12, 1 o'clock Eastern, lunchtime, the markets start to pretty much exhaust itself.
Fizzle out.
And there's usually a retracement around that time.
Yeah. Chris is asking, Chris has said he's short on the euro US dollar and he's in profit 50 pips. He's wondering if it's best to close.
Well, probably yes. I mean, I was short. I just got out about a half an hour ago. I was short from, it was a long-term trade based off the daily chart. But yeah, I got out because that was the target, 130. And the thing is, you never know with a news event. So you can put a break-even stop loss, and
let it go.
If it goes in your direction, then wow, then you'll make a decent amount of pips.
Yeah.
If it turns against you, then you don't lose anything.
That's fat tail trading, right?
I mean, I would put a break-even stop loss, because I don't mind moving 50 pips if I can make 150. You're not gonna lose any money on the trade. So it just depends. It's just your style of trading, how you think about, do you want to give up 50 pips to make 150, or do you want to just close out, bank 50 pips, and wait to see if you can make money on non-farm payroll? So these are decision levels.
Yeah.
You have to decide, and you have to decide fast. You just have to make a decision.
Yeah.
Take your 50 pips, or just put a break-even stop loss and see what happens.
Yeah, Chris wants to have his cake and eat it too. I mean,
Right.
It's a tricky one, because you can take a little bit of profit and then just forget about the rest and move it to break even, like Roberto's saying, or you can just decide, I'm a profit target type of guy, or I'm a fat tail, kind of let it run, and really, it's just up to your personality, isn't it?
Well, the way my perspective is, as long as I'm not losing money on a trade, then it really doesn't matter.
Yeah, the risk is removed when you move to break even, almost.
The risk is removed and the stress is removed. So that's how you want to be trading all the time. And anything to remove the stress and the risk, anything that you can do, it's great. Okay.
Yeah.
Avoid taking risky trades, avoid the high leverage, avoid the risk, and you really go and enjoy trading. Now, I know a lot of traders that are never satisfied, and that's a problem. I'm always satisfied because I'm just wanting to protect my equity. I don't expect to make 100% a month, though that can happen, and it has happened for me. But the expectation isn't there. I don't raise the bar that high. I just want to protect my equity, and each trade is different, and each stop loss is going to be different. So,
what about slippage?
That's how I trade.
Alex R is asking about slippage. He's saying, you can move your stop loss to break even, and then the non-farm payroll comes out, and then it just blasts the other direction. What about getting slipped on that?
Sure.
I mean, it's possible. It is possible. That's why I say it's almost removed. It's not complete. The risk isn't completely removed because that is a possibility.
I'm sorry. Are you talking about that it'll blast past your stop loss?
Yeah. So if you get a really heavy news event that's unexpected number comes out, and if your broker doesn't guarantee your stops, right?
Then you should change brokers.
Yeah. Exactly. Yeah.
That's the simplest answer.
Yeah.
You just. I mean, I don't trade. I would never trade that's something that would happen 10 years ago, but it shouldn't happen with any broker now. And if you're trading with a broker that doesn't guarantee you stop losses, then you should just drop them.
David says every time he goes to break even, he gets slipped. So David, you need to change brokers. Yeah.
What broker is this?
It's going to be an Australian one, and I don't want to say any names because I don't want.
Oh, I'm sorry. You're right.
Yeah.
It shouldn't.
Yeah.
Whatever it is, just forget it. Okay, so here's a news event. There's the reaction.
Okay.
And
whoa.
Let's see what happens. Okay. So I don't have the numbers coming out yet. So if anyone has them, okay, we've got unemployment rate. Let's see. We have 155 jobs. That's positive, but it's not enough. So right now there's no trade. We have to wait till the market settles down to see if there's a trade set up. Okay. And that's why the euro dollar is going up, because the numbers weren't that positive.
Yep.
It was only 5K, and we needed at least 180K. So if you didn't get out of that trade, you're probably stopped out. Maybe not. Okay.
If he was up 50 pips, he may have sold around 30.45. Or 30.50 or 30.45 around there. So
yeah. So this is the thing. The unemployment rate rose, and non-farm payroll just rose. So they're really both negative numbers. They were not positive for the U.S. So that's why the euro dollar is going up, and we should have a trade buying the euro dollar and selling the yen crosses. So we're just going to wait for the market to settle. The euro dollar should go up. The yen crosses should go down. But we need to wait because the numbers are not extreme. So I'm just going to wait for the market to settle and see what direction it takes. Okay. And these are the type of numbers that I really don't like. The market doesn't like this because there's no clear direction. And we have to just wait. And we can't wait forever because this webinar is only an hour long, if that, and hopefully we can get it into a trade. But when the numbers are mixed like this, they weren't extreme, but they were not positive for the U.S., then sometimes it takes about an hour for the market to find direction because the New York session hasn't officially opened up, and it won't till 9:30. That's where all the volume comes in. But we'll wait 15 minutes and we'll just draw these lines. Let's start drawing some lines now and see yen crosses should sell off based on the news event. Okay, so I'm just going to draw these lines, top and bottom. But it's not a guarantee that they will sell off. That's the thing, because usually on a trade line, on a news event, on these numbers, I don't really want to take a trade. I just wait. Okay, because if the numbers are extreme, then usually I just jump in, because no matter what the spread is, you're going to make money on the trade, and no matter if you got in late. And the euro dollar is starting to go up. I'm going to wait for that. This is a 15-minute candle. Let me just go to the 10 or 5-minute. And notice on the 5-minute, it really looks like just shot up. Okay, so this is what probably is going to happen, and I'm just speculating based on the numbers. Euro dollar is probably going up, and the yen crosses are probably going to sell off. So I'm going to wait. This 5-minute candle is about to close on the euro dollar. Can everyone see these charts? I know I've reduced them. They would look better if I expanded them, but can everyone's, I just wanted to make sure I can see all the correlated pairs together, because if they all move together, that's a strong direction. And I'm talking about the yen crosses: pound yen, Canadian yen, Swiss yen, euro yen, and Australian yen.
Linda, Francisco, Mark, everyone's saying that it looks good. Your chart's still visible, so that's good.
Okay, great. Terrific.
And Roberto, Vincent's asking if you would consider playing the loonie at the moment.
Australian dollar?
No, U.S. dollar, Canadian.
Oh, the Canadian. Sorry.
Yeah. I don't know what he sees, and I don't know if he wanted to bring it up or not. But Vincent just asked that.
Yes, because it's U.S. negative. So the dollar is going against the Canadian. So yes, let's go to the 15-minute chart. So this is a trade, but it spiked, and we just have to wait for a retracement to get in. So this is a sell. So let me just put that in. Okay. USD Canadian is a sell. But we don't necessarily want to be catching a falling knife. We want to wait for the market to settle down and either break. If this is a 15, let's go to the 5-minute chart. I used to have I still do have a strategy where I would straddle, I would place an entry 10 pips above or below.
Yeah.
And it's risky because you can get stopped out on either end. But if for example on this trade it moved down 30 pips and we would have netted 20 on this pair if we just took a trade or hedged it actually on both, not 10 pips apart, just enter a trade on a buy and a sell signal, and if you have a U.S. broker, of course you can't do that, and then it put a 10 pip stop loss and see what would happen, and we would be up 20 pips and you could have closed out this trade. But that's the loonie right now. Just wait. It is breaking the 5-minute candle. It should go. You can take a trade going short on this trade because it has, but the candle hasn't closed yet. The 5-minute candle hasn't closed yet. That's why I like trading off the 15-minute, because at least I know on the 15-minute chart it's going to be clear.
Yeah.
Once the 15-minute candle is closed, then it's going to be obvious which way it's going to go. On a 5-minute, there could be an entry, but there could also be a retracement, and you may have to wait 10 minutes more before you're in profit. So let's put that on the side. And
Mark J from the trade room. He's um, asking about the pound. What you if you were looking at the
pound dollar.
yeah.
Well, the pound dollar, that was it. We took that trade yesterday and made it should be going up right now because this is dollar negative, right? What's happening right now? So let's look at the pound dollar. And it's starting to go up. We got in on this trade at 160.57, and I hope everyone exited. Guys in the trade room, if you're here, I hope you exited this trade before non-farm payroll. It went all the way down to 160.07, so that was a nice 50 pip move. But now the numbers came out, and the pound dollar is going up. So we'll put that on the side, and we'll reference it later. But right now, there looks like there's a trade on the loonie to sell. It looks like but I want to wait till this 15-minute candle closes and then just see. Why? Because the numbers were mixed. We didn't really see anything clear. So usually what happens on a 15-minute chart, you'll see a big doji. It's very look what's happening on the Canadian yen after the 5 minutes. It's a big doji. And then, okay, where we're going? Are we going to go up or down? Canadian yen looks like it wants to penetrate the high of that 5-minute candle. So I'd rather wait for a 15-minute candle to close whenever the markets are, and the markets hate this. They do, because there's no, and traders hate this because there's no clear direction yet. Okay, we just have a spike. And traders, inexperienced traders that get in on the spike, they they tend to lose a lot of money on trades because you're thinking it's going in one direction when actually there is no direction yet. There's no clear direction. So I'm just going to keep the 15-minute chart open and just wait for the market to tell me where it wants to go.
David M is saying, there's a nice. He's asking, is there a nice retracement on the Euro 5-minute right now? I think you kind of answered that question, which is, you really.
Yeah, there is a retracement on the 5-minute, exactly. Let's go to the 5-minute and we can analyze that. But again, as I just want to reiterate, is that the numbers were not extreme. Okay? There's the retracement, and if you draw a fib from the bottom to the top, I'm sorry, I got to use the body, then it came down to around 61%, but it's not finished yet. Candle's not finished yet in the 61% retracement level. Technically, that would be a buy because there's a spike up and there's the entry, the retracement, but I don't want to take it because I'm not sure what's going on because of the numbers. If the numbers were extremely positive or negative, and this was the retracement, yes, I would be taking. Let's say the numbers were really, really negative for the dollar. Then this was the initial spike up in the euro dollar. This is the retracement, and this would be the entry. But I'm not interested in taking a trade when the market is undecided. I want a clear direction. I want to know that yes, this is this initial spike on the Australian yen, this initial spike on the Swiss yen, euro yen, and pound yen are real. Okay? And I'm not going to know that until this 15-minute candle is closed. Okay.
So can you, Roberto, we're getting some questions here. Can you explain sort of your just the overall philosophy about the expected number, the actual number, and why, say, the euro dollar might go one way and the yen pairs go the other? Can you just explain that briefly?
Sure. Anything that's U.S. dollar positive is negative for the yen crosses because the yen crosses follow the stock market. So if the stock market goes down, the yen crosses go down. if the U.S. dollar goes up, or rather, I mean down, well, let me see. What did I say first? If the U.S. dollar goes up.
You said if the stock market goes down, the yen crosses go down.
Right. So it goes the opposite of the yen cross in the stock market. Okay. So it's more about investors. Where are they putting their money? Are they putting their money in the U.S. dollar or in the stock market? You can't have it both ways. Okay. So we're looking. I hope that I know that didn't answer your question clearly, and I'll get back to it. But I want to be looking at this trade because
sure.
we're getting this sell. You know, this is a nice sell on the yen crosses right now. Okay. And 15, we've got a minute left, and let's see what happens. So I think the yen crosses are going to be selling off because it hasn't. On the 15-minute chart, there's not much volatility except for this Canadian yen, which gave us this doji, sort of like indecision. Okay, and the euro dollar is finding support and going north. So it looks like we have a trade. So let's just patiently just wait. So anything that's dollar positive is going to usually the stock market goes down and it's a safe haven. So any crisis in the world or in the U.S. economy, or rather in these non-farm payroll numbers, it affects the global markets. So people are looking for safe haven and usually put their money in the dollar. On the other hand, if everything is great in the United States, the stock market goes up and gold goes up. Okay, so here's a trade, guys. I'm shorting the pound yen, and I'm just going to wait a little bit. I'm going to be buying. This is a little risky trade, but I'm going to put a tight stop loss. I'm going to buy the euro dollar. My stop loss is 130, 129.90. Okay.
So you got 33 pips of risk.
Yeah, it's about a 30 pip. Well, actually, I'm not. Okay, you know what? I'm just going to wait till it comes back down a little bit, maybe. So the stop loss is 129.90. And I just don't like how this looks, that's all. It just doesn't look
The euro, you mean?
really clear.
The euro.
What's that? Well, the yen crosses. I'm just waiting for. I need a candle to close below this 15-minute candle on the yen crosses. On the euro dollar, it's finding support at 130. Okay, so that would be a trade. The more conservative approach would be to wait till it breaks a candle to close above 130.24. The yen crosses are all over the place right now. I'm not sure if I even want to take this trade. And I cringe when I do these webinars and the numbers are mixed because I know, oh, this is going to be a difficult trade.
Yeah, but you don't have to take one.
No, you don't have to take the trade, and you don't lose money if you don't take a trade. And I'm not going to pressure anyone to take a trade. I just want to make sure that the analysis is correct. We just have to wait after 15 minutes to see if there's a trade. And the euro-US dollar looks like a buy because the numbers were negative, essentially. We had an increase in unemployment rate, which is U.S. negative, which is not good for the dollar, and the non-farm payroll change was only 5K, which is not enough, and that's what makes. This is why the market is right now caught. The news is being digested, and there's just a lot of indecision right now. There's no clear direction. Okay, but there will be, but it may not happen for another half hour. Okay. But I'm biased towards buying the Euro USD at this point because one thing, it is oversold, and number two, the numbers were US negative, so it should push the Euro USD up. So this is the support, 130, but it's only moved 24 pips or 20 pips around that level. The one that's probably the easiest is a Canadian yen, because we have a doji, and if price either goes north or south, then that will be the direction. Okay.
How long, Mike wants to know, how long will the non-farm payroll news today set the trend for these pairs? Is it just sort of a short-term thing, or is it until the next non-farm payroll?
Depends on the numbers. If they were extreme numbers, it usually is the sentiment for the rest of the month. But we didn't have that. If we had 200K, let's say 200K, the numbers, and we had an unemployment rate that went down 1%, then that would set the tone for the rest of the month. But because we didn't have that, no. Okay. So I'm placing a buy on the pound dollar, the euro dollar. I'm going to the 15-minute chart quickly. So I'm taking a chance on this trade. I've got about a 30 pip stop loss. Just going to take this trade, see what happens. It's moving up. I'm in at 130.27. I'm lucky I have less than a pip spread on my platform. So that's a trade.
And that was based on, can you talk about what that was based on, Roberto? Was it based on the 5-minute?
Because this was a 15-minute candle, and it penetrated the body of the 15-minute candle, and it closed on the 5 already. So we'll go on the 5-minute chart and see that. So let's go to the 5-minute chart quickly. And price, the body broke above here. So here we had a spike up, a retracement. This was the initial buy, but I didn't want to take it because the numbers are mixed. So usually I would have taken an entry down here, and now it's starting to give us direction. Okay. So what I did is that I drew a horizontal line. I sometimes use the wicks or the bodies. It just depends on the candles. This is an inside bar, and this is another inside bar, and now it's starting to break above this inside bar. And so the bias is north, so I'm just taking this. Hopefully it will give us about 20-30 pips, and we can exit this trade. Now, if it starts coming back down to 130, then yes, we're going to have to exit that trade. But my stop loss is about 35 pips, a little bit more than that. It's at 129.95. I put a stop loss. So I don't like that I had to enter all the way up here, but it clearly, technically, is a trade.
And you draw your barriers not on the extremes of the candle, but on the opens and the closes, the body. Is that right? Or
well, I do both ways. What I do is, okay, if I know it just depends on the numbers. Okay, I've got a negative number for the U.S., so the euro dollar should go up. Now on a 5-minute chart, yes, I do both. But I'll draw a horizontal line on the top to the bottom and see if, that's why I like using the 15-minute chart, because I have a clearer picture. Now, I did enter a buy trade, and this is just the indecision that's going on. I think I'm going by the initial spike, which was this one. And price retraced and started going north. So that's what I'm going by. The initial spike was my reference point. And then it retraced, but notice it didn't break below the initial spike. It turned around and went north. So I'm looking at as euro positive.
And Nathan says, does the unemployment have more weight than the payroll, or will they offset each other?
Usually the unemployment, well, it just depends on the numbers. If the numbers, non-farm payroll numbers, were extreme, then the unemployment rate may not affect it because it was not, it was less than 0.1%. Okay, it's still around 7.8%, 7.7, which really is not that much of a difference. If we had a full percentage point plus or minus, yes, that would be huge, but it's not that significant. And the numbers, non-farm payroll numbers, were only 5K. They were positive, but not enough to draw the market. So we look at the unemployment rate as the key, really, because the non-farm payroll was really non-existent. We didn't really, 5K is nothing. Okay, so we look at the unemployment rate, which was negative. So, and here it is, it's drawn in red. Unemployment rate is 7.8, which is negative. Non-farm payroll, 155. It's not green, so it's just black. So it's given us an indication that it's not. It didn't do anything. Okay. So I'm looking at really, and as you can see, euro dollar is starting to take off now. So I'm looking at the unemployment rate is my key, and for my decision to make a trade on the euro dollar. So hopefully you can make $20–30 on 30 pips on this trade. So if it just shoots up about 30–40 pips in the next 5–10 minutes, I'm probably going to just put a break-even stop loss and just leave it alone. So that's the only trade I see right now. Now, if the yen crosses fail to break, now it spiked down and it fails to penetrate the upper regions and gives us a wick, then it's most likely just going to sell off. Okay, because this is what happens. There's a spike, there's a retracement, and then there's a continuation of the trade. Okay. And I hate when there's, like I say again, these are the kind of news events I don't really like. But we may have the euro dollar may recover and start going north from here.
So do you ever, does it ever happen where you sit down to trade the non-farm payroll and then the numbers come out and they're just not enough in either direction, so you just say, well, okay, there's no trade?
Yeah, there's no trade.
Yeah.
So what I do is just wait till 9:30 and see where the market is going to take off. So I hope some of you took the euro dollar because you would be up a little bit right now. Let's briefly look at the pound.
Okay.
Chris, the pound dollar.
Chris was wondering about the dollar yen. He's like, why is that the only yen pair? You're not seeming to, you're not following.
I don't like the dollar yen because for one thing, it doesn't move a lot. Number two, technically, it's unpredictable. It's one of the few pairs that are very unpredictable, and as far as technicals, I don't like trading it at all. And I've been trading for so many years, and I gave up trading the USD yen because we're talking about what, a minimum of 20–30 pips sometimes. It doesn't move a lot, so I gave up on it. I don't need to trade the US yen. I'm trading correlated pairs that move a lot more. The pound yen will move more in 10 minutes than the US yen can move all day sometimes. So why trade a currency that is only going to give me an average of 30 pips? Not even an average of 30 pips. I'd rather trade a currency pair that's going to give me an average of 50 or more and less time, and sometimes half the time. So on a non-farm payroll, yes, the USD yen may move, but it's not probably the only time. Any other time, and it's very difficult to trade, and that's what I found. So I just don't trade it at all. I make a lot more. Think about it. If you can make 5 pips more on other pairs than you do on USD yen, those pips add up. Why would you even bother on a pair that doesn't move that much? So I know a lot of people trade the USD yen. I don't. I just don't like trading it at all. There's so many other pairs. If you're a good technical trader, there's so many other pairs that you can make so much money just trading technically. There's pound Australian dollar, euro Australian dollar, euro New Zealand dollar, oil, gold. Okay, let's briefly look at gold and see what's happening with gold.
Yeah, Jeff just asked what's happening with gold. He said, what about gold?
Yeah, it should be moving up because the dollar is selling off. And if you're not going to put your money in dollar, you put it in gold. And here, this is a nice, on the hour chart, we've got a nice morning star. So this is a buy. Here's your morning star. And so we have a reversal. Stochastics, I use 2 stochastic indicators. Boy, I wish I'd pulled this one up. This one moved a lot quicker than anything else. Okay. I use 2 stochastics indicators, 21 and a 14. When they're both overbought and oversold, and I have a candlestick pattern, that is very, very strong. So here, yes, the gold should be going up. Now, it's got to break 1680. That is or this level here, 1660 and 1680 are 2 very strong resistance levels. Okay, so the first resistance is the swing low at 1660, 1658, but that's definitely a buy. Okay, stop loss at 1623 area, below that, but that's a nice move. I'd like to see it come back down to buy this pair, gold.
Dick is also
I'm glad you mentioned that.
Yeah. Well, Jeff was wondering. He's like, "What's happening with gold? Look at gold." So
yeah, right. I'm
but,
glad you mentioned that. Well, I can't be looking at so many pairs at once and do a webinar and talk. I can chew and gum and walk at the same time. But when it comes to currencies, I have to be careful how many pairs I'm choosing while I'm talking. If I wasn't talking, then I'd be looking at 20 pairs right now and making a decision on all of them. But and that's fine. I love doing these webinars. They're fun. Okay, there's plenty of time to enter these trades. Now, you don't have to enter a trade right now. You can wait till 9:30 when the market's open officially, and you'll see a direction. There may be a bit of a retracement before 9:30. And I would like to see that on gold. I'd like to see it come back down to maybe $5 so I can buy it. But this is clearly a reversal pattern. We have a morning star after a long run. Let's pull it up. Here's a long run. It started all the way up here, put in 680 pips, gave us a morning star. Stochastics is oversold on the 14 and 21. Let's look on what's happening on the 4-hour chart. Okay. 4-hour chart also is oversold on the 21 and 14 on the 4-hour, and it's finding, we don't have any candlestick pattern on the 4-hour chart, but look what's happening. It's respecting the swing low from December 20th.
Boy, that is a pretty.
See how it bounced off?
Yeah, that's a pretty looking chart. Boy, that is very pretty. Yeah.
This is sweet. This is a buy, and let's look in the daily chart. Well, the daily chart's not going to really tell us anything yet. Oh, I take that back. This is a fakie. This is an inside bar, really, and price came back down. If it closes like this, if it closes inside this level, This is a fakie, and the market should just turn around and go back north. As long as it stays above, if this above this 1634 level, and that would be a great trade. So you see, it's not finished on the daily chart, but clearly on the 4-hour chart and 1-hour chart, we see reversal pattern. Okay, let's go back on the 4-hour. There we go. There's your buy. Stochastics oversold, and this is a nice buy. You stop loss below 130. I would put my stop loss below 1620, and wait till it comes back a little bit and buy it. Okay.
Yeah, that looks great.
So euro dollar is, yeah, this is really sweet setup.
Yeah. What about the Aussie? John from the trading room. So thanks, Jeff. Jeff, that's the Jeff from the trading room, by the way, that pointed out gold. And John from the trading room also wants to say, what about the Aussie dollar?
Okay, let's go to Aussie dollar. Should be going up also. Very sweet. It's recovering, and stochastics oversold. We have a color change candle. Wow, we missed out on this trade. Here's a color change candle, and your entry was at 104.10 was a color change candle, and your entry was 104.18, and now it's all the way up to 104.42. So I picked the wrong currency to focus on. All right, this thing just shot up. Let's go on a smaller time frame.
It looks like you may have had some divergence.
15-minute chart. So yeah, there was.
Yeah.
On the 1-hour chart?
Yeah, I don't know. I mean, I don't know if you follow that, but it looks like there may have been some divergence.
I always do. Actually, I was a divergence trader more before I did anything else. Yeah, there is divergence, clear divergence on the 1-hour chart. So yeah, this is definitely a buy, and wait for pullback. This is a nice distribution. Notice these candles. You have 3 red and then 2 green, and this is like this little cup. This is called distribution of order flows. So it's going from sell to buy. So now the bulls are in control, and we're in an uptrend now, and it'd be nice if it broke that resistance level. Stochastic is supporting this trade, so we should be going north on this one. Stochastics indicators. These stochastic indicators, the 21 to 14, work so well with candlestick patterns. And I go over that in the trade room. We do workshops in the trade room where not only do I place calls, but you learn so much about trading. And we're also doing how to trade daily, off the daily charts. Not only are we placing trades, small scalping trades, but we're also looking for trades on a daily chart and staying in on those for a couple of days at a time. So I'm excited about that. It's a new launch, and we're going to be doing more daily signals and short-term signals. So yes, this is a definite buy, and it'd be nice if it retraced so we can get in on this trade.
Yeah, thanks.
So
Thanks,
Australian dollar is a buy. Euro dollar is a buy. Gold is a buy. So there's a lot of options here. Okay, I like that here. I like to see that the pound yen is starting. Notice how it's starting to go back down after it found a little bit of support. It's starting to go down. That's good. So okay, I got a break even stop loss. I'm up on the euro dollar, and I'm going to take a trade on gold. I'm going to go to the 1-hour chart. I'm going to take gold and euro. Okay. So I like this morning star, so I'm just going to take this trade because this is a technical trade. Regardless of the news event, this is a technical trade. This is a nice morning star. Stochastics overbought. I'm oversold on both 21 and 14. So it's a little bit late, but I'm going to enter this trade. If it comes back down, I'm just going to enter again. on this trade. Okay, and I'm targeting the swing. Let me see, where is the swing low? 1652 is my first target, and then 1658. Now, if it breaks 1680, then, or I'm sorry, 1692, then we're in an uptrend. Okay, right now this is a counter trend trade, but this is a reversal pattern, so it should turn around and keep going north. So I hope that helps. I hope you can make money off these trades. I'm waiting for the candle on the 15-minute chart to close below the swing low of the pound yen, because that's the only trade I can see. The other ones are just, see, look at the other trades. The other ones are just consolidating. There's no direction. The only one that looks good is the pound yen.
Emmanuel
looks ready to break the swing low.
Emmanuel's asking if you might buy the pound.
Buy the pound? You should be able to buy the pound. The only thing is, this is the problem I have with the pound. I mean, you can buy it. We have a color change candle, and it is all the trades are U.S. negative. So these are correlated pairs: U.S. Euro, U.S. USD, pound USD, Australian USD should all be going up. But if pound yen starts shooting down, then the pound dollar may be short-lived. It may not move that much. Okay, that's the only thing. It will move up, but I'm concerned about the pound yen shooting down really fast. It may stall out the pound dollar. Okay, that's just my guess. Okay, so I'm going to leave that alone, even though it technically is a nice trade. It's going up. Okay, it's very sweet. Stochastic's oversold on the 1 hour. We have a color change candle. It should go up to at least the resistance level up here. But here we go. The pound yen has broken below. Australian yen is ready to break below. So
that's great. So, Jared, I think you may have missed it. I think Roberto did mention his gold target. You were looking at 1652.
1652 and 1658.
Yeah, yeah. So there you go, Jared. Yeah.
Okay.
Yeah. And you're going to enter the gold trade now, or you're going to wait for the retracement? Ask Brian.
Oh, I already entered. Sorry, I didn't make that clear.
Yeah.
I'm entering at 1645, and if it retraces, I'm just going to enter again, because this is a clear morning star pattern.
Yeah, that's a great chart.
Right there.
It's a great chart.
And if stochastics was overbought on the 1 hour chart, then yes, I would have to wait till the market came back down. Okay. So I'm in both of these trades right now.
Cool.
And I'm up 20 somewhat pips on euro dollar. I'm up just a little bit on gold. And
you'd be up about 30 pips on the euro, wouldn't you? Almost 30, or you got in at 29 or so, didn't you, or 27?
So I wasn't looking at my. Yeah, I'm up 30, 31 actually, 33.
Right.
On this trade. I'm at break-even stop loss. I'm just going to leave that alone. There's a trade on the pound yen now. All right, so this is a trade. 140.
Do you have a
40.68?
Do you have a target on the euro, or are you just going to let it go?
I'm going to let it go. I have a break-even stop loss. I'm just going to leave it till. I'll probably get out. I'm going to leave the euro, the gold. I'm going to leave gold because that's a clear morning star. I'm just going to forget about gold right now. And the euro dollar, I'll probably exit at. Well, what I'm going to do is move my stop loss up. These are the decisions you constantly make. You change. And it just depends how the market is moving, and So I will definitely exit around noon or before noon. There is going to be a retracement in an hour from now because the European sessions are going to be closing, and that would be a nice opportunity to buy. But I'm moving my stop loss up, so I'm up at least 20 pips on this trade. And I'll use a trailing stop, so if it goes up another 20 pips, then I'll move my stop loss up. But these are the only two trades I have right now. And entering, I'm waiting for this 15-minute candle to close on pound yen to enter a short. And the short is about 140.68. Target, let's look at a higher time frame for a target. $140.30 would be a target, and that was the around where the gap up was. So I don't want to stay in when this gap. It was the gap right here. Definitely do not want to be short if it's hitting these levels. So I want to be out of that trade. So maybe about 30 pips off this trade. But the best one really is gold. That's the best trade.
Looks pretty good. Well, is there anything else that anyone wants to ask Roberto? He's been here, I know, for an hour, and this is great, Roberto, that everyone's been able to. I mean, you can see here, Steve is up 28 on the euro, 24 on the Aussies, 5 on gold, I think that is, and then 7 on gold, and he's up 5 on GC, pound Swiss, I guess that is. Steve is up 28 on the euro, so everyone's following along. Darren is up. Darren, pound CAD, right. Okay, got it, Steve. And then Darren is long S&P and short on the pound yen. Yeah, Darren is short on the pound Aussie. Right. Okay, cool. This is excellent. Excellent stuff. That gold chart.
Pound Aussie. Yeah, you should be up a lot in the pound Aussie.
Yeah.
So that one moves quite a bit.
Yeah, he says he's up. He's up tons on the pound Aussie. Sharad's up 30 pips. Sharad's up 30 pips.
You should have said something. I would have pulled this up and pulled the trigger. It's okay. This one is nice. Once it breaks the support, it's going to take off. This is nice, really nice here. Again, here's a distribution of order flows going from buy to sell. So, terrific. Okay, great.
Okay,
hope everyone took gold because that's a real winner.
Yeah. Kostya is wondering about if there's going to be a trading room today.
This is the trading room.
Yeah, right.
We just made money on the trade room / webinar.
Kostya wants more.
Okay. More. It'll be Sunday night. So we're going to be really going into a real serious workshop. We're going to be doing a lot on daily setups. It's going to be a lot of fun. So be there. And they'll be recorded, so if you can't make it, don't worry. All the sessions in the trade room are recorded and loaded up into the members area. So you're not going to miss out on anything. All the workshops will be there.
Nathan, how do you sign up for the trading room? Nathan, you go to theforexcircle.com. Can you bring up the Forex Circle on your... Is that possible, Roberto? Or I can do it?
Sure. Hold on.
Yeah, okay. I can do it. I mean...
I'll do it. No problem.
Yeah. So it's theforexcircle.com. I know a lot of you here are in the trading room. But this is the sort of thing Roberto does, you guys. So he'll go in there. He does Asian session. He does the New York Open. And then he records them all. And then he started to post them for longer term trades. So not only like the 1 hour charts and stuff like that, but he's also starting to post longer term. So as you can see, a lot of people from the trading room are here, and I'm not going to be up late tonight, David. No, I'm not. I'm going to sleep really, really soon.
What time is it?
It's 1:17 over here, a.m. Yeah.
Ouch.
But email me, David. I will respond tomorrow. I just got to get up early tomorrow. That's why. That's the only reason I'm going to sleep now. So Roberto's
here it is. Hold on.
trading room. Okay, here's a trading room. Okay.
It's pulling up. I don't know why it's taking so long. Maybe there's a lot of people in the site, but it's taking forever to load.
Oh.
But it is the forexcircle.com.
Yep. That's it. That's it.
Yeah, I'm sorry. I don't know why it's not pulling up.
That's fine.
But
That's it, David.
maybe
Nathan. Yep, that's it. It's the forexcircle.com. Hey, thanks a lot, Roberto. This is cool. And everyone,
My pleasure. Thanks for attending the webinar.
everyone wants to do it again.
Okay. Well, yeah, maybe we should. In Non-Farm Payroll, we could do another webinar. That wouldn't be a problem.
Yeah, Vincent says, let's do it again. Okay, thanks, Dick. Yeah. Thanks a lot, Roberto. Hey, you guys have a good one.
Thank you, Walter. Thank you, guys.
We'll see you in the trade room.
See you soon.
Yeah.
Okay.
Okay, bye.
Bye.